Now we're talking about the differences here. We got regular, good old normal fraud and constructive fraud. Well, CPA liability can arise through fraud or constructive fraud. These are separate from negligence and involve different elements to establish liability. Obviously, with fraud, there was malicious intent, so it's going to be quite important to make sure we distinguish. Your negligence, oh, you were just lazy and you didn't do your job, you didn't do enough research. But fraud, that's a whole other thing, brings much more serious damages, much more serious remedies, and anything involved with that situation. So here, we're going to talk about fraud, which is also known as intentional misrepresentation. It's intentional. What are the elements of fraud? Well, misrepresentation of a material fact. Now, if you commit fraud for $3 on someone's tax return, that's not going to be considered legal fraud. It's got to be material. So the CPA has made a false statement or misrepresentation regarding a material fact, which is significant or relevant to the matter at hand. Intent to deceive, you knew you had an intent to deceive. That's why it's a little bit harder to prove fraud, but also because it's a much more serious thing, it's a little bit harder to prove. The CPA knowingly made the false statement with the intention of deceiving the client or another party, such as the IRS or a bank or someone like that. We have actual and justifiable reliance. So the plaintiff, which is a client or another party, relied on the misrepresentation, and their reliance on the misrepresentation was reasonable or justifiable. So you see a lot of similarities that we saw before with the fraud, the four things you need to prove for breach of contract. But here, it's just dialing it up to 11. We have intent to induce reliance. The CPA made the misrepresentation with the intent to induce the plaintiff's reliance on the false statements, which is also known as scienter. I want you to memorize that. That's something we'll see in business law. Make sure you have that down. Lastly, damages. The plaintiff suffered damages as a result of relying on the misrepresentation. This is what you need to do to prove fraud. I mean, again, this will come up in business law as well, so make sure you know it. Talking more about constructive fraud, this is going to have the same 5 elements as normal fraud. It's also known as gross negligence. Make sure you have that memorized. It's going to occur when a CPA exhibits carelessness, extreme carelessness, or recklessness in their professional duties without the intent to deceive, as in actual fraud. So basically, it's you were so negligent that it is considered constructive fraud. That's what's going on here. What's an example? Well, a small business owner, Jane, hires Tom, who is a CPA, to prepare her company's financial statements and tax returns. Tom, overwhelmed with other clients and pressed for time, fails to thoroughly review Jane's financial records and makes several critical errors in the financial statements. He also overstates deductions on the tax return, resulting in significantly lower tax liability for Jane's business. So Tom did not intentionally misrepresent information here. In this case, we know his intentions. It was just, oh, damn, he's a little stressed out. He's got a lot going on. But, in real life, you have to determine, was that the case, or did someone actually have malicious intent? But his extreme carelessness and disregard for professional standards in handling Jane's finances do constitute constructive fraud. Jane relies on the incorrect financial statements to secure a business loan and later faces an IRS audit due to the overstated deductions. As a result, Jane suffers financial damages, including penalties and interest from the IRS, and harm to her business reputation. In this example, Tom's extreme carelessness in performing his duties as a CPA amounts to constructive fraud, as he may be held liable for the damages suffered by Jane. Dun, dun, dun. In cases involving fraud, the plaintiff must prove all 5 elements that we mentioned to establish that the CPA is liable for damages. This form of liability is more severe than negligence because it involves an intentional act of deception rather than a failure to exercise due care. A CPA found liable for fraud may face significant financial and professional consequences, including possible loss of professional licensure, fines, and reputational. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.